Hi, I'm Adrian. Welcome to Bricks and More. I'm the CEO and co-founder of SAENTYS, a global creative consultancy specializing in destinations, real estate, and the hospitality sector. Bricks and More is all about exploring how to generate, unlock, and maximize real estate value. Our mission is to challenge outdated and limiting notions of how this is done. In each episode, we talk to top professionals to uncover innovative strategies that drive short, medium, and long-term gains. So if you're passionate about making real estate more valuable for more people, you're in the right place. Welcome to Bricks and More.
In today's market, reacting to trends isn't enough. The most successful real estate players are the ones creating value strategically, thematically, and with conviction. In this episode of Bricks and More, we're digging into the big questions. How do you build a value-add investment strategy that thrives across the cycles? And what does a risk-based, research-driven approach to real estate actually look like in practice? Today's guest is Charles Tarriere, co-founder of Evonite, an independent, partner-led firm taking a bold, risk-based approach to value-add real estate investment across Europe. With deep expertise in fundraising, acquisitions, and asset management, Charles brings a rare combination of financial insight and strategic execution to the table. His career spans leadership roles in portfolio management and development. At Evonite, he's focused on turning data, market themes, and occupier insight into real, measurable value. Hi, Charles. Welcome to Bricks and More.
Hi. Thanks for having me today.
It's going to be a bit strange because we normally speak in French together, so
Indeed.
we're going to do this in English then.
Indeed.
Indeed. So you've had a really long career spanning a lot of leadership roles throughout real estate and different functions. What would you say your core guiding principles are?
Thinking about this question, I think I'd say that having your client at heart, starting with what's the best interest for your client before your own. And when you do good for your clients, they'll do good by you and they'll stay with you. And I think when I think at the difficult times I had through my careers, like say going through the GFC, for example, and I always use sometimes this anecdote where I found myself back in 2008, late in the year. So we were in full GFC mode, having a meeting in Texas, and that investor came in. Actually, didn't come in first and an analyst because we thought it couldn't be bothered. And suddenly we have that high-ranking investor coming in, half sweaty, saying, "Sorry, guys, I only have 10 minutes for you because I'm fighting fires everywhere." No wonder, in the middle of GFC. And I wanted just to thank you for being here. You've not been invited. And at the moment, there are some managers who don't return my call, and it's been 3 months now.
Wow.
And this is the type of stuff that mark a career and always stuck with me to have your investor at heart. What is the best interest?
I think we found that, obviously talking with quite a few different people on the podcast, that service and service to clients is often forgotten as a soft skill, which actually really brings back returns. In terms of the market, and there's obviously a lot of transformation in the market and specifically in your peers, what is it that you felt that was potentially missing or that Evonite could bring that would be new, bold, and game-changing in the market?
There's been a clear change in the last 6 to 7 years where there's been an enormous amount of consolidation in the investment management world. Big firms have acquired smaller or medium-sized managers, and that choice, in a way, for managers, for the investors, who can I invest my money with, has been enormously reduced. And we felt this cannot be good. And as a consequence of that, what we've seen also is that the concentration of fundraising into not even a handful, in a couple or 3 managers has become enormous. I think the stat is that today, I think the top 2 managers concentrate 40% of the fundraising. So I'm not saying this is bad. Many investors want to reduce the amount of managers. They want to invest also a larger amount of money. But also having less choice is not necessarily good for generally a market. And we felt we could bring something new, something fresh, remaining independent. This independence is very important for us.
Yeah, I think independence is a key thing. And again, we're seeing that across asset management firms. We're seeing that across brokerage firms as well, where in a transforming market, those firms with that independence and that client focus can really thrive in a changing environment. With regards to sort of the approach to investing on behalf of your clients, but also of finding those nuggets of value, how would you say that's different?
You said it in the intro that I heard you actually record a little bit earlier. You talked about the word risk.
Mhm.
And I think this is very important for us. I think the market change. And as a consequence, the return will change.
Mhm.
But our job, I see, as to evaluate the risk and to take investment decision depending on the risk. And as the market heats up, usually a lot of investors tend to take a bit more risk for the same amount of returns.
Mm.
And we know where it ends. It always ends in tears.
Mm.
So really our approach is first look at what is the inherent risk of that investment, whatever
Mhm.
investment that is, and then just see if it actually makes sense in current environment.
So you're talking about obviously the market changing. There's been a lot of evolution, especially across asset classes. Some have thrived, some have been challenged in the way that people use them, in the way that people interact them or invest with them. What would you say are the strongest value drivers across Europe in real estate at the moment?
In terms of themes, we live in an environment where there's a lot of instability
Mhm.
geopolitically, economically. And as a consequence, I think having a bit of stability in your investment is important. And
Mhm.
what brings stability is actually the income.
Mhm.
We think that assets that provide an income, that pricing power against, for example, inflation, where you can, as an investor, or where your tenant can transmit the inflation onto the end customer,
Mhm.
is very powerful because then you have a bit more security about that income. Retail is,
Mhm.
for example, a good asset class for that,
Mhm.
where systematically the tenant in that industry transmit the inflation back to the end customer.
Exactly. And what would you say in terms of that notion of that occupier insight that you utilize in your investment strategies? How can that sort of give you that advantage when you're looking at sort of ways of investing or choices?
Well, the answer is simple. You have to think like your occupier.
Mm.
First of all, the occupier or the tenant is a partner.
Mm.
It's funny, in our company, we have this theory of the three P's, or the partners, the performance, and the people.
Mm.
And the first P, which is the partner, includes not just the people with whom we work or for which we work, but also the tenants,
Mm.
because we have to provide something for them. So understanding how they click, understanding what they need from real estate is the best way. So there's different way. I mean, across my career, I've been dealing with multiple asset class. Or again, using the example of retail, you need to understand how retailer thinks, or how they look at the market, purchasing
Mm.
power, catchment area, so on and so forth. Then you go into talk to a law firm, they'll think completely differently. Same for a data center operator.
Mhm.
And that is the insight you need to actually go into. And the key thing is, okay, if I was that tenant taking that space in that building, what would be important for me? What would make me click? I
Mm.
mean, is important for me, for example, attracting a number of young staff who wants to
Mm.
work in a cool environment? Or am I looking here to appeal to people that look for deals? Because I'm a discount retailer, so I can't actually be seeing like having a fit out that looks very luxurious. This is an
Mm.
example.
Do you think that's changed? Because I know that the work that we do on obviously, and we've worked together on the branding and the marketing side, sorry, people were very good at, developers and investors, very good about knowing the product, knowing the location, but there was always this kind of big unknown of, but who are you actually talking to? Who's your consumer? Do you think that's changed? Has that kind of third piece of the equation that you were mentioning has become more and more important across real estate asset
Oh
classes?
yes, I think this is where I'm in the last 20 years of my career. I've
Mm.
seen that enormously evolve. There's enormous effort has been made by the landlords as a
Mm.
whole to actually understand what kind of product, and seeing really real estate as more than just floor plates.
Mhm.
Seeing real estate as this is a tool that companies use for a certain goal.
Yeah. No, exactly.
And I think they're really making a lot of effort to get that insight. Much more research is being done.
Mhm.
But we also, unfortunately, in our industry, are hit by the fact that it's difficult sometimes to get this data,
Mhm.
to really get that insight.
Why would you say it's difficult?
Because very opaque, first of all,
Mm.
between the landlords. I mean, we're here today in London, which is the most open market
Mhm.
where you can get as much information as you can. I mean, try to actually do business in Europe, and
Yeah, that's
sometimes
true.
you can't get any idea about the pricing,
Mm.
about stuff like this. And then when it comes to working with tenants, I'll give you an example.
Mhm.
few years back. I seem to be talking only about retail today in terms of anecdotes.
Oh, that's
but
good.
we were trying to implement some green leases. So, and one of the key things on green lease is the data. So working with your tenants, so the tenant provide their consumption data and all that thing. And we had a number of tenants who would refuse. Why would they do that? Not because they weren't green, but because they knew that if they gave the data in terms of consumption, that would give an insight to the taxman to calculate how much of the internet retail is driven out of the store so they could actually charge a higher tax onto the store.
Okay.
Obviously, it's nobody would think about that. So one has to find a way to actually still accommodate the reality of things. Nobody likes to pay too much tax. But with the imperative, we need to make sure that our buildings become greener, and we need to have collaboration of everyone, starting with the data.
I think it's interesting, isn't it, as well? Because if we look at certain asset classes, you mentioned retail, which has gone through seems to be on the up, apparently, according to some figures, but obviously very much challenged by internet purchases. Then the offices challenged very much by working from home. So really these societal changes in the way that we occupy space and the way that we view space have obviously direct links to where someone would want to invest, develop a new asset class. In terms of sort of the way that you talk to your investors, what do you think in the current market, where do you think the value add strategies fall short today?
They fall short, first of all, because value add is not a constant thing, I would say, in terms of investment. Going back to what I was saying earlier about the risk, assessing the risk. Value add can be today buying for value, really buying something cheap where you're actually not taking that much risk. So you're taking almost a corporate risk. Value add could be also, I've got here a market with actually no supply, I'm taking a development risk, which some may see that more as opportunity risk. But I think what is important to me is staying consistent in terms of your returns. I'd rather have a consistent element of returns in a portfolio of assets rather than actually top performers and actually bottom performers, because on the long term it pays off.
And you'll have to clean up the sort of the shopping basket at some point or another.
Exactly.
In terms of sort of going into some practical case studies, do you have a sort of recent deal that you've done with Evonite that really illustrates your approach to value creation?
Maybe not very recent, but I think a few years back, we were interested in Berlin. Now I'm talking probably quite a few years back, but I think you'll understand where I'm getting at. The way we approached the market, it was a market which just came out of a decade of recession after the reunification. There was no data, at least off the shelf. And what we decided to do was to actually do primary data on the back of the evolution that we saw in the London market in terms of the office, the digital roundabout, and how the rent tripled in a matter of 2 to 3 years. And we could see actually a trend happening in Berlin where a lot of tech companies were arriving. So we decided to do our primary research. So we went to interview some of the tech players already existing in Berlin at the time, asking her, what do you need from your real estate? Again, putting yourself on the shoes of your tenant. What do you need from the real estate? What type of real estate you want. And as such, we have actually mapped the type of real estate that they wanted. And it was, without too much surprise, cool buildings, warehouse, old factories. Didn't need to be air conditioned, where you could basically come with your bicycle on the second floor with a goods lift, a lot of space, a completely open space. And that then triggered a research where we literally cataloged the number of streets in Berlin, in certain areas of Berlin, which we thought, okay, we can see those buildings of certain character in those streets. And then we proactively started to actually contact the landlords. The beauty of the notarial system on the continent is that you have that information. And that's how you actually create off-market transactions. But it all started with, again, this primary research because it didn't exist. This is something which is obviously harder to do today, but to me, it really encapsulates how we think about it. Really, it takes us a long time to get familiar with a market, with certain asset class. But once we're convinced, it means we've collected the data and we're pretty sure about what we want to buy, how we want to buy it. And we've created also an edge, which in this case was having that list of potential of market transaction we could do.
Yeah, because you knew who the players were and what kind of buildings they'd be looking for. Going really back to that, buildings that they'd be looking for, you'd obviously identified a sort of niche or sort of an opportunity. Do you see, with regards to commercial real estate, occupiers' requirements have changed with regards to the way that they occupy or lease space?
Obviously, COVID has had a change in this. I think companies are still taking time to really assess what it is. I am still a believer of offices. Flexibility is important, albeit what does this mean is still the big question mark. And we see that, unlike retail, which we talked about earlier, which has been fundamental change in terms of the way shop, in office, COVID has been a small, very strong, very hard change. But I don't think fundamentally we'll look in 5 years from now and 10 years from now that will be an asset class that will disappear.
Yeah, definitely.
There's be probably oversupply of it, and the use of it will change, but it has been going through a number of revolutions in the last 150 years of being
definitely.
used.
So, with regards to different markets within Europe, the period you're referring to in Berlin, there was this kind of absolutely a period where things were really, really underpriced. Do you see other markets where there's that real obvious opportunity, or is it something you have to really dig around a bit more to seize and understand and capture?
I think there's real opportunity without, again, taking too much risk. I think at the moment it's a period where one shouldn't take too much risk. We hear a lot about beds and sheds, and I struggle to really see the risk-adjusted returns here. I have endless conversations with some of my peers in data center industry where where I keep on asking them, but you're taking a development risk here. That's not just taking an existing building which you can actually tinker around. It encapsulates quite much more risk. So how do you actually value this? But I think there's definitely opportunities. We've seen a repricing in the last 2 years.
Yep. Sufficient repricing, would you say? Sufficient repricing, would you say?
No, I think that process is still taken.
Still ongoing.
Still ongoing in some markets. As we know, as European, we like to take our time rather than actually rip the bandage and start fresh, like here.
Yeah.
Exactly. But I think Southern Europe is very interesting. I think Germany still has some further pain to go through, but there will be definitely an opportunity. But there's also an opportunity in terms of the type of deal, the size of deal, for example. We strongly believe in the traditional sectors, office, retail, logistics, especially the small size logistics, and the smaller deal size. I think, again, as I was saying earlier, the consolidation industry where there's been bigger and bigger managers who actually need larger transaction. Well, there's still a lot of value in the small lot size, where if you don't need to do a 150 million euro deal every day, but you're happy with a 10 and 15 million, you can make quite a lot of money. And I think that there's a gap in the market for that.
And are there any, as you talking about before, any asset classes that you're dubious about at the moment?
I think everything I've said to date, up until now, it's actually pretty clear. It's retail. I actually love retail. One of the reasons is that retail was one of the two sectors where I started basically my career. And after 2007, where I basically had to say goodbye to that asset class I really like, especially necessity retail. And after going through 15 years of what's the word of being knocked down, seen as a taboo sector. I see really the benefit of retail and the importance of retail in our different asset classes. I'm happy with that. In a way, it's funny because when you speak to certain players today, without disrespect, you find yourself in front of people that have never actually done retail because it's been so taboo for 15 years. They need to re-educate themselves about it, about the importance and the appeal of retail cash flow, for example. What is actually supports the cash flow of retail behind? We talked earlier about inflation, how in a way supermarkets will never be really affected by inflation. Affordability, unlike for example in residential, is less of a problem because we've gone through 10, 15 years of rent being knocked down. So all this actually is in favor. And also an asset class is probably the most important, a very short supply. Nobody has really built retail in the last 15 years. as a whole, if you compare to other asset
As a
classes
whole,
such
you're
as
right. Yeah.
industrial, such as offices, because there's been an enormous, especially in Europe, there's been a restriction by the planners, for example, to protect city center shops and so on and so forth. So all this together making an asset class which seems very interesting today. But you need the skill set, and the beauty of having started there, we have it.
Yeah, you're a dying breed. Yeah.
Almost.
Almost. There's a question that we were discussing before that might be a tricky one, might not be a tricky one, around the sort of what I would call the kind of physical or operational changes. Which ones do you think that really make the biggest difference to not only the asset's value, but potentially also its resilience? As we said, there's a lot of movement, there's a lot of requirement for resilience or adaptability. But what would you say those physical and operational changes might be? Obviously dependent on the asset class.
If you had asked me about that case study we talked about, I would have said the building needs to look cool. Because the key thing for the tenant was to actually attract that young staff. I think a lot needs to be said about simplicity of real estate. I think sometimes the complexity that we tend to put in it, or that building needs to have that type of air conditioning, that type of facilities. And you find yourself with actually assets which are so complex that they're difficult to run. They are also very expensive to run. And as a consequence, also, they're bound to age a bit more quickly. Not that I want to be nasty against data center, but that's also a technology, for example, that evolves very quickly.
Yeah, it does.
Who says that a data center today will still be acceptable in 20 years' time? If you take, I mentioned earlier, simple little industrial estates, many of them, they still look the same than they were 30 years ago. They can be improved, especially from an ESG point of view. But ultimately, it's four wheels and a tin.
And they're still here.
And they're still here because they're very flexible. The tenant can do whatever they want with it.
Super interesting. In terms of your approach at Evonite with regards to ESG, sustainable buildings, and the kind of notion that they are the big stock within Europe that's considered to be brown buildings or stranded assets, how do you see the opportunity in those, or how do you sort of, we were saying about transforming the asset into something new, giving it a new lease of life within the new sort of required parameters?
As Evonite, we are focused on value-add investment. So the beauty of value-add is we tend to take something which needs to be improved. And our mandate is to actually bring to a healthier, more sustainable bucket. So as a consequence, there's some easy wins we can do. And I must admit, sometimes I feel my job is a bit easier than being the manager of a big core fund, where ultimately, how do you improve already something which has already the top spec in terms of ESG? But we talked earlier about data, and I think data is one of the key things. Quite often, what we do is also buying from non-institutional landlords, where data is the least of their concerns. So our first duty, in my view, is to collect that data and make sure that it is passed on to the next generation of landlords. And whilst we own it, obviously it's improving on. But again, the simple action can be done, improving the roof, improving the windows, improving the energy consumptions, all that. But if you don't have that data, it's a bit useless. It's useless. You don't have a way to measure your success or not.
And do you feel now, with regards to your clients and the people who will be giving you funds to invest, have you seen their criteria change? We talked about risk a little bit. Is there anything else where you've seen a change in attitude towards real estate, or what they're expecting real estate to deliver to them or for them?
I think many investors, we've gone through a period where real estate has been probably overutilized as a financial tool in a way. So we've seen a period where buying leverage core has been very profitable, but at the same time, it had to stop, and it's now stopped. And as a consequence of that, there was a lot of new players who didn't fully understand that real estate is ultimately an illiquid asset. And these, I'm still questioning whether they're going to stay for long, or they're going to have to readjust a bit their view on real estate. But there's another group of investors who understand the beauty of real estate, especially when it comes to income. Income is one of the USP that real estate has to offer compared to other asset class, the stability of income.
Hmm.
And if you find a manager who navigates for you those cycles and deliver an inflation hedge at the moment, it's actually, in my view, a good,
Oh, that's pretty good, isn't
thing.
it? I think also you've got the revenue, you're absolutely right. I think what I've always loved about real estate as well is its ability to adapt and to transform. A car's a car, a shoe's a shoe, but a real estate asset, and we've seen it with really successful sort of retrofits or things that were previously in another life, I don't know, an office that became, or old factories that became prime residential in city centres. I think that's also that ability to transform, to adapt to societal needs, I think is a really strong way of doing it. How would you say, obviously, we're talking about resilience through ESG, but there's also sort of financial resilience. We were talking about revenue as well. How do you ensure or try to ensure the long-term performance while still delivering short and medium-term returns? Because there's always that notion of, those three levels of timing. How have you got a sort of secret formula to be able to do that? You got a
Secret
crystal
formula is
ball?
being disciplined,
Yeah.
in my view, is one of the key things. I've seen time and time over where you sit on a very healthy paper profit
Hmm.
and then think, oh, I'm just going to held a bit more that returns, and then something happens, it evaporates. Because obviously you can control your asset, but you cannot control your market. And I think being that discipline is very important. When you hit your return, just sell, especially when you're value add
Stick
investors.
to the plan.
Yeah, stick to the plan. The
Yeah.
second thing I'd say, which is very important also in value add, is that when you buy an asset, an investment, you need to make sure that you have multiple lever to achieve your returns.
Mhm.
Maybe you'll buy an asset with 5 different levers. You're going to be able to act on 2, maybe 3 of them. And if you act on the 3, gosh, you'll be in upside return territory. But this is important. Just an asset which it either works or it actually bums, that's never a good plan in my view. You need to make sure you have multiple branches to hold on to.
In terms of the market at the moment, and maybe looking at a few sort of little nuggets, do you think there's, and maybe it is, again, it's retail, one asset class or one area that you think at the moment is underestimated, undervalued, not talked about enough?
Office, actually, it's been obviously hammered over the last 2 years. We're seeing the sentiment investor changing at the moment. Some investors now openly talking about office. We've kept office on our investment shopping list. And I had recently a call actually last week when investors said, oh, it's quite refreshing to see finally a manager actually who dares talk about
Who
office.
dares talk about office, yeah.
And there's obviously...
Do you still call it office?
Yes,
You
you still call it office.
You haven't masquerade changed the name.
No,
Yeah.
no. But it's obviously have to be selective. There's still further pain to be felt in that sector. There's a bit of froth that's been overdeveloped. But I believe that some of the pricing is starting to become very interesting for what is sustainable cash flow office with a real use, not redundant real estate.
Because I think you're absolutely right. And I think that's a really difficult one. We were talking about data, we were talking about consumer insights. And it's specifically with regards to the office, it's really, really difficult to get because even the owners of companies, even ourselves at SAENTYS, it's been very hard to define a policy. There's been a lot of remote working, a lot of remote recruiting as well, which has given us a wide variety of the ways that we occupy space. But that is refreshing to hear that the office as a destination is still back on investors' radar and looked at with confidence.
Yes. And also to go alongside what you're saying, office has always been hard. Is it a cost center? Is it the profit center? It's always been the hard bit to evaluate. You'd say a law firm, that's probably their profit center. And I don't know, a hotline for whatever company is probably a cost center. But would the company be as much liked by the customer if they didn't have that hotline? This is always the kind of the circle you need to understand. And that's the hard bit about offices. And I was saying earlier about the simplicity of buildings. Office building can be very complicated as well. And that's why the relative success we had in places such as Berlin, but also we did the same in cities like Barcelona or Copenhagen. Buying those simple buildings made it easier because they were adaptable to whatever tenant we had.
How would you react to sort of the rumors, or it's not even rumors because some of them have entered that space of hospitality operators wanting to become more active within the office sector? How
What do you
would
mean
you?
in terms of the flex office operator or?
Actually, even hospitality groups like Accor, some of their sort of hotel components do have a co-working sort of product that goes with it. And there have been some noises in the market that hotel operators would want to come into the space.
I think actually it's very valid. It's
Hmm.
funny because up until a few years back, before Evonite,
Hmm.
flex operator, for example, were our tenants. So I had a
Hmm.
landlord-tenant relationship with them. And in the first few years of our existence, we've been using a flex office. So
Hmm.
we've become actually a customer, a user of this. And I've discovered something new, especially the one we're using, which I won't name, but
No, you're not plugging them then.
they're being run by
Yeah.
hospitality people. And they got it right.
Mm.
Those people, they're exactly what it needs. I've seen other operators which think really like landlords, and it's not the right thing. Where the one that I'm referring to is really hospitality mindset. So I think that there's a place for that because ultimately they bring an additional value in terms of their customer care.
Mhm.
They really make you feel at ease when you go there, make you swallow the pill of a higher rent as well, much
Yeah.
more easily.
But hopefully as well, because we're also in our London office, also in one of those operators' spaces as well, and it takes away a lot of the hassle.
Exactly.
But I think the key thing, and it's maybe also going back to what you're saying at the beginning, it's all about customer service and making sure that you're listening to who the tenants are and understanding what they are. We talked a lot about value within real estate. Are there any surprises left? Is there any market or any asset class that you think is ready that we might see some more surprises, things that might be transformed or pop out that no one's really seeing at the moment?
The last 5 years, it's all been about alternatives. I think it's been, in certain cases, for me, more of a marketing spin,
Mm.
branding spin,
What
than
would you
anything
mean by
else.
sorry, alternatives in terms of clarification? What would you mean by?
I think if you think about self-storage,
Okay. Yeah.
about dark kitchen,
Mm.
about dark store, that stuff. At the end of the day, these are urban logistics assets or
Mm.
small logistics industrial assets, which have just converted for a new use. And I those type of surprise, I'm sure there will be somebody coming up with a
Mhm.
new way to deal with it. That's not the way I think about it.
Mhm.
I think more about it about what's the fundamental change in the use of some real estate?
Mhm.
We've seen, talking about industrial, when we did our big push industrial was back in 2011, 2012. I remember we did that in France, and it was a market where everybody was looking at us. What are you doing going to France buying logistics assets? A market which has no GDP growth
Mhm.
and in an asset class where basically, unless you're a developer, you will not make any money, or nobody has made any money in 20 years.
So why are you going? Yeah.
But
Mhm.
there was a fundamental change in the offer and supply balance there, where up until the early 2000s, there was a lot of supply, and then it's been absorbed, but there's not been much development. So when we
Mhm.
came in the early 2010s, there was indeed fundamental change in terms of usage. The e-commerce were coming up, but also the traditional sectors were needed to still use logistics assets. And we've seen suddenly this push on the rent for an asset class which hadn't seen. If you had bought, I think, a logistics asset in the 90s compared to 2010, I think the rent was pretty much
Flat
flat.
line. Yeah.
And I think we'll see those fundamental change. So what you need to understand is that what will trigger the changes. And I believe that retail is one of them today,
Mhm.
for example, because it's been hammered, it's been tabooed for 15 years. And somehow, by certain players, been forgotten that it's an essential part of our lives and day-to-day lives.
Mhm.
And as a consequence, investors will come back into it and say, well, actually, it's viable real estate, it's viable cash flow. I
Mhm.
can make money. Because actually, my underlying tenant, and that's obviously the most important, is making money out of this. I'll give you another anecdote. A few years
Mhm.
back, was talking to the director of expansion of one of the leading
Mhm.
UK retailers, omni-channel, so presence on physical store and online, and said to us, probably two-thirds of our any investments to our distribution is online. We need to spend an enormous amount of money. Three-quarters of our profit comes from all brick-and-mortar retail parks.
Wow.
Because it's simple real estate. They can put all their stock there. They're not constrained by any opening hours or big service charges they have in shopping centers. So they have to invest into the logistics on the online presence to make sure that the customers, they retain the market shares, but their profit is in good old brick and mortar.
That's crazy. I would not say that that's something that a lot of people would know. I think probably the perception would be that the bricks and mortar acts actually the opposite. That the bricks and mortar acts as the flagship, as a kind of advertising element, and that the online is where all the sales are done and where all the profit's done.
That person gave us also another anecdote or another reference when he said, if you let's assume you have a 50,000 square meter logistic shed, which is quite big, and suddenly you need to double it because there's demand. Operating a 100,000 square meter shed is a completely different ballgame. Your distances could be twice as big, but then the logistics of it, the operation of it, so much more complicated and costly. So it's not a matter of adding, I can do 10% of my business online where I used to do 5%. So the cost will be a simple incremental 20%. No. It's quite different the way it's working.
No, that is a good anecdote. That's a good nugget. Yeah, because it's been massively challenged. When you talk about retail, do you include the sort of more F&B experiential elements in that as well? In terms of a sort of like the bars, the restaurants, the sort of more experiential assets, the darts, the bowling, all the rest of it. Do you put that in there as well or do you really look at sort of?
Well, my preference when it comes to retail is necessity, proximity shopping. So the convenience type of retail, which can include F&B. It's where you do your daily or your weekly shopping, and there's always an element of F&B. The important is your tenant mix. What will attract your local family to come here on a weekly basis to make sure they do the groceries because it's local, but also because it provides suddenly very easily 90% of their retail needs in one destination. And may include, actually, I like to go with my kids on a Wednesday afternoon where they don't have school, have the little food, and maybe just go to the little jumping place where I can have a bit of a rest when I exhaust the kids.
Yeah, I mean, that's the key thing. I think what we've also found, and this is a lot of buildings that we've branded, help market, bring to market. A lot of the time we've utilized, especially on mixed use, we've used a kind of bottom up. So get the retail, get the F&B, get that will attract tenants for the internal sort of spaces, but it will also create a destination within the area, as you said, where external visitors will come and activate your asset as well. So it has that double positive.
Well, remember one of the first buildings we worked on together in Switzerland, of all places, we actually had one of the first tenants was a creche.
And that's true, it was.
We actually found out that creche was a magnet for companies because I thought in Switzerland everybody had access to creche for free and it was easy. It's very difficult.
It's a battle.
So companies came in and say, am I allowed to have actually some space in the creche because I'm a tenant? Okay. That makes the conversation so much easier with them. Again, it's just adding a service, something to your occupier.
In terms of Evonite and the future, or the next couple of years, what are you excited about? Where do you see the opportunities going? How do you see it growing and developing and being the one of those forward bearers of the sort of independence that we talked about before?
First of all, it's nice to see that our core principle hasn't changed in terms of the pertinence of it being independent in a world which has enormously consolidated. I think it's been also recent news about further consolidation in the industry. And for that, I think that our place and what we can offer to our clients, to our investors, is still more than valid than yesterday. What's exciting about is first working with my co-founders and our colleagues in the business. I'm really lucky to work with a good bunch of people who know what they're doing, and we're having fun as well. I think the first question you asked me today, I forgot to say that what led me to here. I think having fun as well in what you do is important. When you don't have that fun, maybe it's time to change. And we've created with Evonite a place which working hard, but also having fun whilst we're working for our clients. And I think going forward, we're agile, very nimble, and I think that's what should actually help us in the future to grab the best opportunities. I learned a word in the 2023. So back then, from our head of research, he will recognize himself. He used the word perma-crisis. And we've definitely been living for the last 6 or 7 years, especially in the UK here.
Yeah.
Perma-crisis has been a crisis after another. So you have to be flexible in what you do. You can't just simply, I'll invest into this, and be really convinced that 3 years down the line, that investment rationale still will hold.
Yeah.
I think it's almost pretentious to think that it's going to be like this. So hence, I think being flexible, being nimble, agile in terms of where you invest, still with the core fundamentals about assessing that risk I mentioned is quite important. And for that, I think we're extremely well set up.
And you've got the independence to be able to do that
Indeed.
as well. Perfect. Charles, thanks ever so much for your time on
Thank you very much
on the show. Some amazing insights in there. And thanks for doing this exercise with me in English. It was perfect.
Thanks a lot.
Merci.
Merci.
Thanks for listening to Bricks and More. If you've enjoyed today's episode, please share it with a colleague or friend who would appreciate it. If you're not already, connect with me on LinkedIn, whether to say hello or discuss a destination, real estate, or hospitality project of your own. Finally, please rate the podcast on Apple, Spotify, or wherever you get your podcasts. Again, share the episode, connect with me on LinkedIn, and rate the podcast. I'm Adrian Strittmatter, and I'll be back soon with the next episode.